Ever found yourself staring at your phone, wondering if you could just transfer funds from a joint account without waiting for the other person's nod? Maybe you're out, need cash, and the joint account is the only one with enough. Or perhaps you're planning a surprise and need to withdraw funds discreetly. It's a common question, especially when it comes to online banks like Ally Bank, where the rules might seem a bit different. We're talking about joint accounts, those financial partnerships where two or more people share the same pot of money. It's a practical setup, right? Shared expenses, combined savings, a financial handshake between partners, family members, or even business associates. But what happens when you need to act solo? Can you, as one of the account holders, just pull money out without getting the green light from everyone else? This isn't just a simple yes or no. It's a question that dives into the heart of account agreements, legal ownership, and the very nature of joint finances. We're not just talking about Ally Bank here, though we'll focus on them specifically. We're discussing a fundamental aspect of how financial institutions handle shared accounts and how that impacts your day-to-day life. Picture this: you and your partner have a joint savings account at Ally Bank. You need to pay for an emergency car repair, and it's time-sensitive. Do you have to wait until you both can sit down, log in, and authorize the transfer? Or can you, as a named account holder, take care of it yourself? Or, consider the other side of the coin. What if you're the one who doesn't want funds moved? What protections are in place to ensure that your money isn't withdrawn without your knowledge or consent? This question isn't just about convenience, it's about trust, financial security, and understanding the fine print of your banking agreements. So, let's tackle this head-on. Can one person withdraw money from an Ally Bank joint account? The short answer, generally, is yes. But, as with anything financial, there are crucial nuances and caveats. When you open a joint account, you're essentially entering into a contract with the bank. This contract outlines the rights and responsibilities of each account holder. In the case of Ally Bank, and most banks for that matter, joint accounts are typically structured with joint tenants with right of survivorship. This means that each account holder has equal rights to the funds in the account. Each person can deposit, withdraw, and manage the account independently. This independence is a critical aspect. It allows for flexibility and convenience, especially in situations where immediate access to funds is necessary. For example, if you need to pay a bill, purchase groceries, or handle an emergency, you don't have to wait for the other account holder to be available. You can simply log into your Ally Bank account, transfer funds, or use your debit card. However, this independence also comes with responsibility. It's crucial to understand that any action you take on the account affects all account holders. If you withdraw a large sum of money, it reduces the balance available to everyone else. If you overdraw the account, all account holders are responsible for the fees and penalties. So, how does Ally Bank facilitate this? Ally Bank, being an online bank, emphasizes digital access and convenience. You can manage your joint account through their website or mobile app, allowing you to transfer funds, pay bills, and monitor transactions from anywhere. Each account holder typically receives their own login credentials, providing individual access to the account. Now, let's address some potential concerns. What about fraud or unauthorized withdrawals? Ally Bank, like other reputable banks, has security measures in place to protect your account. These measures include encryption, two-factor authentication, and transaction monitoring. However, it's essential to be vigilant and monitor your account activity regularly. If you notice any suspicious transactions, you should contact Ally Bank immediately. Another common question is, what happens if there's a disagreement between account holders? If you and the other account holder have a dispute over the use of funds, Ally Bank will typically remain neutral. They will not take sides or intervene in the dispute. The bank's role is to provide access to the account according to the terms of the agreement. It's up to the account holders to resolve any disagreements between themselves. Now, let's talk about the specific nuances of Ally Bank's account agreement. While the general principle of independent access applies, it's crucial to read and understand the terms and conditions of your specific account. These terms may vary depending on the type of account you have and any specific agreements you made when opening the account. For example, some joint accounts may have restrictions on large withdrawals or transfers. These restrictions are typically designed to protect all account holders from unauthorized activity. It's also worth noting that Ally Bank may require additional documentation or authorization for certain transactions, such as closing the account or making significant changes to the account agreement. In essence, the ability for one person to withdraw money from an Ally Bank joint account is a double-edged sword. It offers convenience and flexibility, but it also requires trust and responsibility. To ensure a smooth and harmonious joint banking experience, it's essential to communicate openly with the other account holder, establish clear guidelines for using the account, and monitor your account activity regularly. Let's break it down into key takeaways. Independent access. Generally, each account holder has the right to withdraw funds independently. Account agreement. Always read and understand the terms and conditions of your specific account. Security measures. Ally Bank has security measures in place, but vigilance is crucial. Disputes. The bank will remain neutral in disputes between account holders. Communication. Open communication with the other account holder is essential. It's also important to remember that laws can vary slightly from state to state. While Ally Bank itself has its own terms, some state laws may add extra layers of complexity. For instance, in some states, a court order might be necessary to restrict access to a joint account, even if one account holder requests it. So, in conclusion, yes, one person can generally withdraw money from an Ally Bank joint account. However, this power should be exercised responsibly and with open communication with the other account holder. It's not just about the technical ability to withdraw, but the ethical and relational implications that come with it. Understanding the terms of your account, staying vigilant about security, and maintaining open communication are key to a successful joint banking experience. With that said, thanks for watching, and until next time.